Welcome back to the channel, everyone. Today, we're going to take a deep dive into AMC Entertainment Holdings, ticker AMC. If you've been following the markets, you know that AMC is one of the most talked about stocks out there, with a history that ranges from the depths of the pandemic to the heights of meme stock mania. Over the next 18 minutes, we'll cover everything you need to know about AMC, its business, recent news, stock performance, financial health, insider and institutional activity, analyst opinions, and what the future might hold for this iconic theater chain. Let's start with an overview of AMC Entertainment Holdings. AMC is the largest movie theater chain in the United States and has a significant international presence as well. The company operates hundreds of theaters and thousands of screens, making it a central player in the theatrical exhibition industry. AMC is based in Leawood, Kansas, and has long been a bellwether for the health of moviegoing as a form of entertainment. Now, let's talk about recent news and developments. AMC has been making headlines for a mix of positive and challenging reasons. On the positive side, AMC recently announced its most successful weekend of the year, driven by blockbuster releases like Lilo and Stitch and a new Mission Impossible installment. This led to a record-breaking Memorial Day weekend, with 7 million people visiting AMC theaters and generating the third-largest five-day revenue in the last decade. This surge in attendance is a breath of fresh air after years of struggles for the industry, which has faced declining attendance as more viewers turn to streaming. In addition to strong box office numbers, AMC has rolled out new initiatives to bring more moviegoers through its doors. For example, the company is now offering 50% off adult ticket prices on Wednesdays to Stubs members. This move is designed to attract more customers and boost high-margin sales of snacks and drinks. On the partnership front, AMC has significantly expanded its collaboration with IMAX, upgrading and expanding IMAX screens across 80 theaters in the U.S. The company has also deepened its partnership with Dolby, further enhancing the premium experience it offers to customers. These upgrades are part of AMC's strategy to differentiate itself from streaming and provide unique, high-quality experiences that can't be replicated at home. Let's turn to stock performance. AMC's stock has been on a wild ride over the past few years. The all-time high closing price for AMC was $625.50 per share during the meme stock frenzy of 2021, but since then, the stock has fallen dramatically and is now trading in the $3 range. Over the last 12 months, AMC's stock price has been volatile, with a 52-week high of $5.76 and a low of $2.45. The recent rally in May saw the stock briefly touch $4 before settling back down toward $3, reflecting both renewed investor interest and ongoing uncertainty about the company's long-term prospects. Trading volume has also been unusually high at times, especially around major news events and earnings releases. For example, after the Memorial Day weekend announcement, AMC saw a surge in trading activity as investors reacted to the positive box office results. This kind of volatility is typical for AMC, which remains a favorite among retail investors and traders. Now, let's dig into the financials. AMC's most recent quarterly report showed that while the company is seeing some positive trends, it is still facing significant challenges. Revenue for the first quarter of 2025 was $862.5 million, down from $951.4 million in the same period last year. The company's net loss also expanded, from $163.5 million to $202.1 million over the same period. These numbers highlight the ongoing difficulties AMC faces as it works to recover from the pandemic and adapt to a changing entertainment landscape. Despite these challenges, AMC's valuation remains low compared to its sales. The stock's price-to-sales ratio is just 0.3, which is well below the industry average and suggests that AMC is trading at a discount to its revenue. This could make the stock attractive to value investors, but it also reflects the market's skepticism about AMC's ability to return to consistent profitability. Let's look at insider and institutional activity. Over the past 6 months, institutional investors have been net buyers of AMC stock, purchasing about $924 million worth of shares while selling $744 million. Institutions now own a little over 56% of AMC, which is a positive sign that the stock is moving beyond its meme stock phase and attracting more serious, long-term investors. Insider activity has been relatively quiet, with no major buying or selling reported recently. What are analysts saying about AMC? The consensus among analysts is mixed. The average price target for AMC is around $2.92, with the highest target currently at $3. With AMC trading just above $3, the stock is slightly above the consensus target, which suggests that analysts see limited upside in the near term. Most analysts rate AMC as a hold, reflecting both the company's recent progress and its ongoing challenges. Some analysts have lowered their price targets in recent weeks, citing continued losses and uncertainty about the pace of recovery in the theater industry. Let's talk about technical analysis and market sentiment. Technical indicators show that AMC stock is currently trading below its key moving averages, which is a bearish signal. However, the recent rally in May and the surge in trading volume suggest that there is still strong interest in the stock among retail investors. Market sentiment is cautious but improving, with investors watching closely for signs of a sustained turnaround in AMC's business. Let's look at some of the risks and opportunities for AMC. Risks. Ongoing losses. AMC is still losing money, and its revenue has declined year over year. Industry headwinds. The movie theater industry faces long-term challenges from streaming and changing consumer habits. Volatility. The stock is highly volatile, which can be risky for investors. Debt levels. AMC has a significant amount of debt, which could limit its flexibility in the future. Opportunities. Strong brand and market position. AMC is the largest theater chain in the U.S. and has a strong brand. Innovative initiatives. New promotions and partnerships are helping to attract more customers. Institutional interest. Institutions are increasing their ownership, which could provide more stability for the stock. Potential for recovery. If moviegoing continues to rebound, AMC could see improved financial results. Let's zoom out and look at the bigger picture. The global movie theater industry is still recovering from the pandemic, but there are signs of life. North American box office revenue is expected to climb by about 7% this year, driven by a better slate of films and improving attendance. AMC, as the largest theater chain, is well positioned to benefit from this trend if it can continue to attract audiences and manage its costs effectively. To wrap up, AMC Entertainment Holdings is a company with a storied history and a lot of potential, but it's also facing significant challenges. As always, it's important to do your own research and consider your risk tolerance before making any investment decisions. If you found this video helpful, don't forget to like, subscribe, and hit the notification bell so you don't miss our next update. Thanks for watching, and see you next time.